All right, so let me just make sure that if you guys can hear us out there, will you guys let us know and confirm it, and then we'll get started. So let me, all right, so. All right, so once we get confirmation from everyone that the audio is good, okay, so we got confirmation that the audio is good, right? Okay, so we have multiple people saying that the audio is good. So let's go ahead and start the broadcast here. What's up, everyone? This is Tai Zen. And today, we do not have the Honorable Grandmaster, legendary, world-renowned LeonFu.com with us, okay? If he decides to join us later, that would be awesome, but if not, that's okay, because today's topic, right, is outside his scope of expertise, and it's outside of my scope of expertise because we're cryptocurrency traders and investors. We are not professional lawyers or licensed attorneys. So a couple of weeks ago, guys, we have a SEC released an investigative report on the DAO tokens. And I wanted to do some commentary on it, but then I realized as I was reading through it that I didn't understand, you know, half the stuff they were talking about in there. And so what I did was I reached out to Greg Rigano. He is a corporate attorney who focuses on blockchain and cryptocurrency-based businesses. He helps them navigate the legal waters. So let's everyone welcome attorney Greg Rigano. Say hello to everyone, Greg.
Thank you, Ty, for that wonderful intro. Hello, everybody. Hello, world.
Okay, so I thought that it would be better to have you on to help us understand this report that I have here in front of me on the side over here, than instead of me and Leon trying to interpret it and explain it to the public, right? So let me just explain to everyone who you are, Greg, real quick, and then you can also chime in. Greg is a former attorney at a huge law firm in New York. Greg is broadcasting from New York right now, and I'm broadcasting from Atlanta, Georgia. And Greg is a former attorney at a huge law firm in New York called Chadbourne and Park, and recently they merged with an even bigger law firm, and so with Nose Fulbright. Is that correct, Greg?
Norton Rose Fulbright, and I'm still an attorney, not a former attorney, still an attorney.
Yeah. Okay, you're still an attorney. You're just not with Chadbourne anymore.
Correct. Yes.
Correct. Okay.
I'm pursuing blockchain.
Okay.
Full time.
And so we, the way that I met Greg was that I went to a cryptocurrency conference in New York, and we were there to look at investments, different ICOs and cryptos that are coming out. And at the same time, since we were in New York, we were hoping to run into some attorneys that would, we were looking for attorneys that happened to invest in cryptocurrencies and knew about, you know, cryptocurrency and blockchain and understand the law and understand those matters, so they can help our company navigate the legal waters here. Okay, since we are traders and investors, we don't know anything about the law. So we found out when we ran into Greg here, we found out that he was an attorney who focused specifically on Bitcoins, blockchains, and cryptocurrencies. And he has followed our channel, and he actually invests in cryptocurrencies. So it would made it much easier to talk to him about our business and stuff. And we've actually retained full disclosure. We have actually retained, you know, Greg to help us with our business legal matters. So we invited him to come on here to help us explain this SEC report. So before we go into the report, Greg, can you explain to the audience here, in case they live outside the US, what is the SEC in the first place, and why are they so important in the cryptocurrency world?
Sure. So the SEC is the United States Securities and Exchange Commission. The SEC is primarily responsible for enforcing federal securities laws, proposing security regulations, and basically anything federal securities is under the purview of the SEC.
Okay. And so when they released this report about the DAO token sale,
right?
What is it that what makes this so important? Is it because it's the first time that they released this? Because I've never seen a report like this come from the SEC before.
So what government will do in the United States, for those of you outside of the country, what you'll see a state government do or federal government is they'll issue guidance on an issue that is sometimes hot, sometimes not, but you know, the people want some sort of guidance as to how to go about navigating any sort of legal issue and how to be in compliance. So
okay,
the DAO raised $150 million, so that brought some attention to what was going on. So it was hot at the time. So, and then ICOs are, excuse me, token sales, we'll call them.
Yeah.
Semantic at this point. They're raising hundreds of millions of dollars. So this was kind of screaming for someone to say something. You know, please give us guidance on what's happening here.
Okay, so let me see. This I think would help, since we're talking about the Securities and Exchange Commission, and this DAO report here is about, you know, whether or not the DAO token sale was a security. Could you briefly describe to the audience and explain to the audience what makes something a security? Like if I give you baseball cards or comic books, is that a security? You know, I know that stocks are a security, bonds are a security. So could you explain to the audience, in case someone's outside the U.S. or someone's not familiar with Wall Street, what makes it a security?
Sure. So, you know, especially in the crypto world now, everybody has now heard of this test called the Howey test, right? And that is case law that was outlined to determine what is a security and what is not a security. And this case law is not black and white. It's up for interpretation, and depending on who's interpreting it, it could go one way or the other. So on a fundamental level, a security can be a number of different types of financial vehicles. But specifically for this, we'll call it an investment contract, which is an investment of money in a common enterprise with the expectation of profits, and such profits are derived from the efforts of others.
Okay.
So that is, you know, basic framework. Okay.
So can you help us, first of all, because I sent out the link to the report to everyone. So this is this report is written in like legal format. Could you just just briefly describe to everyone that's looking at it how what are the components of it, so that they'll know, because there's a lot of text on there, and if someone has never read a government report or text before, because there's sites, there's references at the bottom of every page. I mean, there's like just a bunch of stuff on there.
Sure.
So can you just kind of briefly describe it so that someone that's new to reading legal material?
So why don't we just put this to the people? If you want to Google that,
yeah,
that's the report that we're talking about. Came out on July 25th, 2017, entitled Report of Investigation Pursuant to Section 21A of the Securities and Exchange Act of 1934, the DAO. So this report is guidance from the SEC about whether or not the DAO, the decentralized autonomous organization built on top of Ethereum, was a security, and in fact it was deemed so by the SEC. So when you read through it, and I highly recommend everybody in the space or who's considering becoming involved with blockchain or crypto actually reads this report and does not just kind of, it's very well written. It's a very well written legal document, and it's likely going to be cited in the future. So when you look at this report, what you really want to do is read it through one time without doing much highlighting, and kind of digest it, and then read it through a second time and see where you have questions. And if you do have questions, and you're potentially going to engage in some sort of commercial enterprise, even if it's just trading, you should probably consult a lawyer to know whether or not what you're investing in is a security or not, and regulations that may be on the periphery of that.
Okay, so the report here, I have it on the side on a different screen here, right? It starts out with an introduction and a summary. So it explains what the DAO is, and basically they're stating the facts and the background. So let me just share with, in case someone's new to cryptocurrencies and missed the DAO fiasco and the hack that happened last year. The DAO was supposed to be the DAO stands for a decentralized autonomous organization. It was supposed to be a virtual corporation that exists only on the blockchain, and it was supposed to be handling the governance. And what it did was it was supposed to collect and raise money into one pool, and then the DAO, the autonomous corporation, was going to make decisions, and people can help vote and help it make decisions on where it takes that money and put it into different investments. And then everybody can, the profit from those investments will be distributed back out to the people that hold the DAO tokens. They raised about $150 million in ethers, and everyone who participated in it received these DAO tokens, and then they can use those DAO tokens to make votes and to make proposals on what businesses or what projects, what cryptocurrency projects to invest in, and then the profits from those projects will be redistributed back to everyone. And before they were able to invest into anything, they were hacked, and a bunch of money was stolen from them. And so that forced the Ethereum Foundation to hard fork the blockchain and return the $150 million back to all the original DAO investors, okay, or the people that participated in the DAO. And so that happened in April 30th through May 28th of 2016. And so now, nearly over a year later, the SEC finally releases this report on their investigation of it. And so from my understanding, Greg, they have announced that they are not moving forward with any criminal, what do you call that, indictments? Is that correct?
So I'm not a criminal lawyer.
Yeah. So
I did take criminal law though, but right. It doesn't look like they're pursuing enforcement action against the DAO. That could be for a number of reasons. You know, that's up for speculation as to what those reasons are. But you know, what's most important is now that we know that the SEC is watching. There's a certain framework that has always been in place in the Howey test, but now, you know, yes, we're applying it to here. Crypto isn't completely unregulated, as people previously believed, and you know, be aware. You should absolutely be aware that this is happening.
Okay, so as people are reading through this DAO, the SEC DAO report, Greg, what is it that they need to pay attention to, and what is it that they need to extract from it?
Okay,
you know.
Great question. So what the DAO really turned on, or what the SEC really looked at, was not the code, reals. So all throughout this SEC report, the SEC, again, did not interpret any of the code. The smart contract code was not utilized. It was all about the marketing materials. And in the marketing materials, it was said that purchasing the DAO was like buying shares in a company and getting the right to dividends. There was no limitations on the sophistication of the investor. Slockett, who created the DAO, promoted secondary market trading. But most specifically, so those were just things kind of in the marketing materials saying this is a for-profit entity, invest, return on investment, right? So that would satisfy items 1 through 3 of the Howey test: investment of money in a common enterprise and the expectation of profits. So the SEC, they analyzed the facts, and then they went through items 1 through 4 of the Howey test, and really items 1 through 3, they only dedicated a paragraph 2 or 3 to. But item 4, prong 4, derived from the efforts of others, they dedicated 4 pages of legal analysis to that. And that kind of is what token, that is likely what token will hinge on. The managerial profits derived from the efforts of others. So if you have the report in front of you, you could turn to page 12, section 3B4, derived from the managerial efforts of others. And here is where, you know, to me, the real analysis starts.
Okay, so basically what you're saying is that the Howey test has 4 questions that the court has asked to determine if a product or whatever it is that's being issued is a security or not. And basically, the report indicates that the first 3 of those questions has been satisfied, or the first 3 prongs of the test, of the Howey test, has been satisfied. And you're saying that they only spent a brief moment on that because that was easy to satisfy?
Right. So it actually says that all of them were satisfied.
Mm-hmm. And then the 4th one is the one that is it derived from the managerial efforts of others. That's the one you're saying that they spent a lot of time on.
Right, because that's, yes, because was there an investment of money? This is a side thing that we'll talk about a little later on, but Ether, they considered Ether money. They did not say Ether was a security. They said it was money. So that's an interesting thing in and of itself that we'll talk about a little later. There was an investment of money in a common enterprise. The DAO, clearly, is common enterprise. Expectation of profits. It was specifically stated by the DAO that you were investing in this for an expectation of profit, right? So all of those were satisfied. And the issue that token sales, ICOs, are trying to structure around, at least that I'm seeing now, is derived from the managerial efforts of others. Prong 4 of the Howey test. What is the governance? What are the voting rights? Are they true voting rights? Or is it, you know, voting rights that truly can't affect the organization because the personnel that launched it, like the DAO or Slockit, are really the ones governing the enterprise. So here, the SEC said that it was the DAO, it was Slockit, and their curators that were kind of enabling the voting to occur. And it even went so far. I love this. The report cited a YouTube video with Vlad Zamfir. Vlad Zamfir, he's a big-time Ethereum developer, and they used his words against the DAO, saying that the curators in Slockit more or less have control over the proposals that the DAO token holders would vote on. So basically, the SEC was of the opinion that it wasn't the DAO token holders that were truly affecting the organization. I'm sorry, let me back that up and clarify that. The SEC came to the conclusion that it was Slockit and the curators enabled by Slockit that had the ability to essentially whitelist certain proposals to allow DAO token holders to vote on. So that managerial ability from the DAO and Slockit, it was really the foundation that the SEC used to satisfy prong 4 of the Howey test.
Okay. So basically, there are some people right now. So basically, when they're issuing these DAO tokens, they're considered the way that the DAO did it, the way that Slockit issued the DAO tokens. It's considered a security inside the U.S. And what you know, to help the people understand that, right? Why is that important? Do they have, if it's security, what do they have to do? They have to register with the Securities and Exchange Commission. They have to get an exemption from them. Why is that important that it's if it's security that they have to well, why is that issue such a big issue that it's a security, Greg?
Sure. So, you know, we've all heard of the New York Stock Exchange or NASDAQ and the term initial public offering, you know, at this point. And in order to so if you satisfy the Howey test, you're a security now, right? Mm-hmm. So according to various federal laws that I don't want to bore you with, if you satisfy the Howey test, you're a security, you fall under the jurisdiction of the SEC, and you need to register that security with the SEC so that, you know, you have more or less their go ahead, you're not committing fraud, and the what you're holding out this investment opportunity to be has kind of been blessed by the SEC to proceed to engage in capital formation to take money from the public. But what's especially interesting in this situation is there's a difference between accredited and unaccredited investors. So accredited investors, more or less, are people with a net worth of $1 million or more. Unaccredited investors, and there's other details in there, but just for the sake of ease, accredited is $1 million or more net worth, unaccredited is under $1 million. So in the crypto space, tokens, coins, you know, operating on Bittrex, Poloniex, Coinbase, prior to this decision, it was kind of fast and loose. And they were allowing these exchanges and the people issuing these tokens were allowing for unaccredited investors to invest, which is a big no.
Okay, so I'm gonna jump in real quick so that the audience understands. You know, what is considered an accredited investor inside the U.S. because this is something that's gonna baffle people outside the U.S. Is that, you know, like they don't have some of the people like don't have that concept like in Vietnam and China and Korea and Africa and stuff. So what is it considered an accredited investor?
So an accredited investor is someone with a net worth of $1 million or more, I believe independent of their home value, or someone who's made approximately $200,000 a year for, I think, about 2 years in a row. And unaccredited investors are people that are not that.
Okay, so basically, if you don't make in the U.S. laws, if you don't make $200,000 a year and you don't have a $1 million net worth that excludes your house, then you're not able. Companies and businesses cannot offer securities to them. Is that correct?
No. So what it means is that, so like a venture capital deal, right? So Slockit was essentially holding themselves out to be more or less a venture capital firm, and an unaccredited investor is not allowed to invest in a venture capital firm unless that venture capital firm trades publicly on the NASDAQ or New York Stock Exchange. So when you trade in like Facebook stock, right? Anyone could invest in that has access to the capital markets, whether you're accredited or unaccredited, because now it's publicly traded. It's on, you know, any stock on the NASDAQ or New York Stock Exchange has gone through the registration process with the SEC. And registering a security with the SEC is not a small ordeal. There are plenty of law firms that charge $1,000 an hour that you use to register a security, right? But in a venture capital deal, only a credit. So to invest in Facebook stock, anybody that has access to a Fidelity account can do it. But prior to Facebook going public, there were multiple rounds of funding that an unaccredited investor could not get access to, right? Because they didn't satisfy the $1 million threshold or higher. Only accredited investors could get in there, right? So in this case, in the DAO said, well, unaccredited, accredited, we don't care. We're not registered with the SEC, and everybody come on in. Even though now we know that it is a security. So that was the issue. So the DAO created a security, said everybody unaccredited and accredited come in. We're not registered with the SEC. And let's get this party going. And kind of that's where the issue comes from.
So just real quick, guys, I want to welcome the Honorable Grandmaster, legendary, world-renowned LeonFood.com is joining us while he's driving. Say hello, Leon.
Hey, guys. Sorry I'm late. I had to get on the road here.
Yeah.
But yeah, better late than never, as they say.
Yeah. Okay. So basically, Greg was just explaining why the Slockit, who was issuing the DAO tokens, which is considered a security because it passes the Howey test. So basically, what you're saying, Greg, is that because it's considered security, they have to register it with the SEC, and they can only offer it to an accredited investor. They cannot offer it to the regular public.
Well, if they did an IPO,
mm-hmm.
If they did an IPO and wanted to trade on the NASDAQ, yeah, sure. But the issue with that is, and something that's, you don't hear most people talk about. So what's incredible to me about blockchain and crypto is it enables capital formation in a geo-agnostic fashion, irrespective of your bank account. Of course, it has to not be a security, right?
So let me, hold on. You're in New York on Wall Street, geo-agnostic. That means that people can raise money, right, to build their business and start their business from anywhere in the world.
There you go, Ty. You must have some experience trading.
Okay, so you guys, Greg is an attorney, so he has to, be careful and say things, according to the law and everything, So I'm not an attorney, so I like to bring it down to the street level so people can understand it. Okay. So you're saying that the capital they can raise capital means that they can raise money, and geo-agnostic meaning that they can do it from anywhere from around the world.
Yeah, as long as they're compliant with the jurisdictions. Whereas, so Slockit could have registered with the SEC and done an IPO and done all that. But the problem with that is that it costs significant legal fees, and you have to pay investment bankers usually to do an IPO, to place, like when you see people hitting the bell on the stock exchange, they paid a significant sum to lawyers to register with the SEC, these fat 100 to 200 page registration documents that discuss what the offering is and the like. And that causes a lot of issues for people that want to raise money, because do you really have $1 million to spend on legal fees? So that's why kind of we see people going to tokens, but you have to make sure that what you're doing is not a security. So the DAO could have done it like a security, but then when you do that, you're potentially taking yourself out of crypto land, and you're bringing your entity into fiat world, US dollars, euros, and that historically has been limited by geography. For example, If you're not Google and you're a company that has a few $100 million in revenue, and you have like a valuation of like $1 billion or less, a market cap, chances are you're likely not and you're going to go public, do an IPO in the United States. Chances are you're not going to get investment from Asia, Eastern Europe, probably not even Western Europe. Maybe you'll get a little institutional money from the UK, not South America. But with crypto, you can get it from anywhere in the world. So that's kind of the appeal and the draw to it.
Okay, so
Greg, I got a question for you here. Can you hear me?
Yes, Leon. How are you? Go ahead.
So, is it possible? I mean, you said.
Hey, Leon, just real quick, Leon, you got to speak up.
Okay, I'm speaking directly into my phone. I
Okay.
can't speak any louder. So when I mean, okay, so you said that the reason people don't register as a security is because it costs a lot of money to pay the lawyers and register with the SEC and doing all of that good stuff. But the lack of money is not a problem in crypto now. I mean, all of these projects are raising more money than they could ever possibly need. At least that's the environment we're in right now. So is it possible, like the DAO, as an example, raised almost $150, $200 million at one point? That is certainly enough money to pay enough lawyers to do everything legally, right? So is it possible now that ICOs are raising, $10, $50, $100 million, that they still register with the SEC and offer a security, like maybe do an angel round to say raise $1 million. So now that I have enough money to actually go create a security, but I just issue it on the blockchain rather than say on the NASDAQ, on the New York Stock Exchange then.
Right, and I think this is where things are headed, and we're going to see it in the next few days with Filecoin, which is doing it on a much greater scale. But I think that's a very astute observation, Leon, because yes, you want to do it. I think you want to do it on the blockchain because then that gives you access to planet Earth as opposed to just the United States or the UK. So you're saying register a security with the SEC, then issue that security on the blockchain.
Yeah, if the issue is that you need $1 million to register a security, well then maybe you do that privately, right? You get you raise that money from a traditional VC or just from angels to get your $1 million that you need to then go register a security, that you use then use that money to register a security with the SEC or with whatever jurisdiction, and then issue that.
Oh, Leon, you're cutting out a little bit.
Yeah, a call came in. That's why. But then issue a security, do an ICO, but now it's a registered security, money from anybody because now you're a registered security. Why will we be seeing that more now? And like I said, I don't understand why is it that I can go buy a stock on the NASDAQ or the New York Stock Exchange. I don't have to be a accredited investor, but if I want to invest in Filecoin, I need to be an accredited investor. What's the difference there?
So don't quote me on this, but I'm pretty sure for Filecoin, they're doing it under Reg D, which means that SEC Regulation D, which means since they're admitting it's a security and only offering it to accredited investors, that under Regulation D, you do not have to register that with the SEC. So because it's only to accredited investors, right?
Versus, what about a stock that trades on the market, like on the Apple stock, as an example?
So Apple stock, they did all their rounds of private funding, regular VC rounds before, and then they went public, right? So when you do your IPO, you have to register with the SEC. You have to do your registration statements, which are these fat 100 to 200 page documents, highly technical about the offering. You have to do a back and forth with the SEC. This could take months, could take years. And then that registration process with the SEC says, okay, SEC has looked at this now. It looks like you guys have lawyers in place. You have bankers in place. Now you could sell this to the public, to the retail investor.
Okay, now can we do that with an ICO? Can we replicate that model with an ICO? It's because they have enough money now. I would say that last year or 2 years ago, there was not enough capital to cover that overhead. But now with ICOs that are able to raise, tens and hundreds of millions of dollars, they can go do that. They have the resources to go do that. And still, what I'm saying is that there's enough money now that you can go do all that legal work and still have enough money left over to do the project, correct?
It depends how you raise it. It depends how you raise it initially, but essentially what Leon is, so the other issue with having it as a security is it's no longer permissionless, right? So like if you want to register an account at Fidelity and you're from like Thai, from Vietnam, like a small fishing village, Fidelity is going to have to do a KYC AML process on you, right?
Yeah.
Who knows what that will result in, with someone from a small fishing village.
They will not let you register an account with them. They will not, because I used to use several different brokers in the U.S. and I tried to talk to the brokers that helped me open up the accounts in America, and they won't let the people in Vietnam open up the accounts. And it's not because the American brokerages do not want to accept money from Vietnam. It's the Vietnamese government won't. They have very strict capital controls on it, to where they won't let money come out of Vietnam into an American brokerage.
Okay, but that's two separate issues now, right?
Yeah.
I mean, that's a capital control issue. But
yeah,
right.
But now that let's say hypothetically,
but
we did all that. We wanted to do an ICO. It is a security. We registered with the SEC, and now rather than taking Bitcoin, rather than taking fiat, I just take Bitcoins or Ethers, and I raise my money that way, and I issue them a security over a blockchain. I mean, how is that?
And where is it? Where is the security in this hypothetical world trading? Like, is it just?
It can trade anywhere, right? It's peer to peer. I can trade it. It's who says that a security, like if I issue you a security, if I'm let's just say hypothetically I'm issuing a security, I don't need to. It's not my responsibility as the issuer as to where it trades, is it? Like, I give you the tokens. It's on a blockchain. How you trade it, am I as an issuer responsible for how it's traded?
It's an amazing question.
Right? I just issued the security. I registered. I did all that legal work, but I'm not responsible. Like Apple is not responsible for how Apple trades, right? It's the NASDAQ. It's the exchanges that are, the liability on how it trades is with the exchanges, not with the issuer. Is that correct?
Well, no, because like there are plenty of securities lawyers out there that just do plaintiff's work, meaning that like they'll try to sue Apple every opportunity they can to do some sort of class action.
Okay.
So if there's an exchange that's like fast and loose and causes issues for Apple, like say an exchange goes bust because there was too much leverage allowed for on that exchange and it goes bust on Apple stock, well then Apple could potentially be liable, in a situation like that.
But Apple has no jurisdiction or control over that exchange, right? I mean, that's
well, think about it like this. So Apple trades on the NASDAQ?
Yes.
So Apple chose to go to the NASDAQ. Apple does not trade on the New York Stock Exchange, right? Let me make sure on that. Right, so Apple could have gone to either one, but they chose the NASDAQ, likely because it's more technology based.
That's not exactly true because there's dozens of exchanges across the
okay. Hey, just guys, just real quick. I want to jump in real quick, okay?
Sure.
Because I want us to remain focused on the SEC DAO report here, and how it affects traders and investors. Okay, because I know Greg's time is limited. You know.
Sure.
So so what I want to bring us back to, and we're getting a lot of questions from the audience here, Greg, is
Sure.
that there are three. I'm going to mute you real quick, okay, Leon?
Oh, Ty, I think you muted yourself. I like hearing you laugh with just seeing your face. But I just want to address Leon's point real quick. So Leon Sifu is calling for a worldwide stock exchange, a worldwide securities exchange on the blockchain. That's what Leon's calling for. I actually remember speaking with my law school professor about this like 6 or 7 years ago. He's like, yeah, why doesn't that exist? I think it's brilliant, and I think it's just a matter of time before we get there. But it was, I think what caused us to go down this pathway was registration with the SEC and what that process is. So, you know, that's not a small process, but Leon was saying that it could be easier now to raise $1 million from private capital and just kind of proceed with paying the lawyers and bankers. Maybe it's anywhere between $1 to $5 million to pay your lawyers and bankers, and then to proceed with registration on the SEC, and then put that security on the blockchain, and then allow trading to go from there. But I guess my hesitation with that is blockchain is permissionless and securities are not permissionless. There's KYC, AML to it, like Bitcoins, Monero, Zcash. These things are used to trade in the underworld, and they don't require a KYC process. Whereas buying Apple stock, can you really buy Apple stock peer-to-peer? Maybe, but most people do it, you know, using Fidelity or a licensed brokerage. I don't want to digress too much further, but if you have anything to respond to, please go ahead.
Okay, so I'm looking at from you know, myself and this feedback from somewhere. So I'm looking at it like this, Greg, from as a trader and investor, and our channel full of traders and investors, because we are an investing channel, right? There's three groups of people that I see that are affected by this, and it's the people that issue the tokens, the crypto tokens, the people that are trading the crypto tokens, right? And the businesses that are involved in dealing with the crypto tokens, right? How do you see this SEC report? And let's just start with the people that are issuing the tokens, right? Moving forward, what do you see, like, from your legal background, what do you see would be best practices for a crypto project? What type of legal would they need to look for or implement to make sure that the SEC doesn't come down on them?
That's an amazing question. That's a tall order of a question. First of all, this is kind of where we're getting into potential legal advice.
Yeah.
I am nobody's lawyer on the chat box or anyone that watches this. And this is not legal advice. This is, you know, a friendly conversation to discuss a very high-end financial technology. It's a risky technology. It's new. Things can happen. Things can break. So again, this is not legal advice. So with that, first thing you want to do is, if you're planning to do a token sale, you want to get with a lawyer immediately. Like, that should be the first thing you do. And it's fine to have lawyer as an outside counsel, but sometimes having a lawyer as an outside counsel requires you to spot the issues. And if you don't spot an issue, like the DAO and Slockit, could potentially be a bad situation. Like, what you really don't want to do when you're starting any new business, you don't want to be involved in litigation, and you don't want to start receiving enforcement letters or any sort of letters from the government. You want to be in compliance and on the up and up from the beginning. So what I highly recommend is you bring in-house counsel that can spot all the issues for you. Because again, if you're only using outside counsel and you have to give them all of your information, are you going to give them all of your information? Are they going to be in the day-to-day with you in the trenches? Like if you just slip up one time and market this the wrong way or use the wrong vocabulary, it could be serious issues for you. So first thing would be get with a lawyer ASAP. The second part of it is that you can't go around selling something as an investment, profits, dividends, and without like expecting to register with the SEC. So that's another major thing. But what I would kind of like to focus on here is prong 4 of the Howey test and what the SEC said. So, and you know, Leon and Ty speak about it all the time. And the SEC isolated it. It's about governance, right? What is what value does your token bring, and how is it governed? And that's what's likely going to determine if it fits in the Howey test or not. Because it's an investment of money, common enterprise, and you know, do you have an expectation of profit? Maybe not. Like EOS, for example, says that this token is nothing, more or less. What do they say, Ty?
Yeah, they. I haven't done a lot of research into it, you know, but they because of this Bitcoin split, the hard fork and stuff that I've been researching on. But yeah, they said something to that extent that a lot of these token people are issuing these tokens now are trying to skirt the issue. In my opinion, this is my opinion, okay? I'm not a lawyer, and this is my opinion. Unlike you, I'm not a lawyer, and I am. This is my opinion, okay? Is that a lot of these crypto projects that are issuing these tokens are trying to skirt and avoid being labeled as a security, and based on my super duper amateur interpretation of what the SEC DAO report is saying, is that they are saying that no matter what you call it or what you label it, right, if it performs like a security, they are going to treat it as a security, regardless of what you determine it. They're the ones who determine if your project is, if what you're giving out is a security or not.
Right.
They have a final say so, not you, okay, and not me, and not the crypto projects, okay. And
yes. So on that, so this was marketed as an investment with the expectation of profits, and then it's a matter of where were the profits coming from? Was it purely based on the DAO, or was there kind of like a manager? Was Slockit running it? And the SEC essentially said that there was Slockit, there were curators that are in one form or another enabled by Slockit, and that Slockit and these curators had control over the enterprise. And there are several interesting points that the SEC hits on. One being that the decentralization of the DAO actually favored it being deemed a security, because the SEC said if you have all these parties all over the world that are now in this decentralized autonomous organization, it's really difficult for them to get organized to effect a decision. Yes, there are message boards and all that good stuff, but they used proof of the hack, if you want to call it a hack, the poorly written code. They used proof of Slockit having to intervene to handle that poorly written code hack, right? So they said, but for Slockit, where would the money be? So they use that to say, okay, Slockit has control. Then they use the curators. The curators were the ones that were kind of allowing proposals to be whitelisted so that DAO token holders could vote on them. So, but for those curators, the DAO token holders couldn't vote on it. Then the other thing that was very interesting, that again, going back to the decentralization of it, which is really, really interesting to me, how decentralization favored it being a security, was that the voters weren't really organized. So going forward, it'll be very interesting to see kind of how tokens are structured based on this. Is it going to be that the DAO has full ability to put proposals forward? What about the governance voting structure? Are you going to make it so that votes can be consolidated and easily enabled? Or, you know, are you going to make people do it decentralized on Reddit and Slack and, you know, make it not as easy to do? Is it a for-profit or non-profit entity? The DAO was structured as and marketed as a for-profit entity. And a lot of people now are turning to not-for-profits in Switzerland, Singapore. I'm even seeing a few that are coming out of Grand Cayman now.
So basically, what you're saying is, like we talked about the three groups earlier: the people issuing the tokens, the people that are trading the tokens and investing in the tokens, and the people that are the businesses that are involved with those tokens. You're saying that for the people issuing the tokens, they need to have a counsel or an attorney or a lawyer look at all the trouble spots that they could possibly potentially run into, and let their lawyers figure it out for them.
Yes, and it's really, I honestly can't stress this enough, that there's outside counsel and then there's in-house counsel. Outside counsel is great, you know. Having outside counsel, you'll find tremendous lawyers that have focused on very niches of certain parts of the law. But what's really important before you go to outside counsel is you want to have someone in-house to spot issues, to know, okay, this is not so good, so that you can bring it to, and I know this sounds like, oh, we got to get lawyers involved. He's a lawyer. He just wants to get paid, all this stuff. No, you want to be compliant with the SEC, because the worst thing that could happen is, so what if the DAO existed and it was trading now and all this good stuff, and then this SEC decision comes down? Well, trading, okay, so now everybody that's trading the DAO, every exchange that's involved with the DAO, is going to have issues that'll probably cause issues for liquidity, and the price of the token will probably go down, right? So you really want to be compliant from day one and not have to do it after you have issues, and then, you know, it could cause issues for what you guys are trying to effectively do.
Okay, so so that's on the people issuing the tokens. Now let's talk about the other two groups of people that are involved in these cryptocurrency tokens, Greg. So let's talk about the traders and investors. From your personal perspective, and I know that you've mentioned it multiple times that, you know, you're not, you know, the lawyer. You know, you are a lawyer because we retain you, but you're not the audience, the subscribers and the viewers' lawyers. Okay, and this is your opinion. Is that from a trader and an investor's perspective, how are you? What do you see that could possibly? How could that possibly the SEC report? How could that possibly affect the investors and the traders that are trading and investing in these tokens?
So a lot of people are not going to like what I'm about to say right now. So I did not invest in the DAO. I always do thorough analysis as to whether or not something is a security for, you know, getting involved with it. But if you, so it says it in this report, essentially, if you enable non-security trading to occur, you have some sort of liability. Now it's a matter of, is the SEC going to come after you, right? So the SEC is a federal agency with limited funding. So are they going to go after big whales, you know, an enterprise that's raising $150 million? Or are they going to go after someone that's trading a few $1,000s on an exchange? I don't know. I don't know. But so you can't enable something that's a security, right? If you're issuing it, if you're trading in it, or you're enabling it to be traded on your exchange. There are different, depending on certain levels of your involvement, it could trigger certain investigations and other penalties. But from what we're seeing from this SEC report is they're not taking action against Slockit. I don't think they said whether or not they're going to take action against the exchanges or the individuals that bought in. That's for, you know, you guys to speculate on. But again, you know, we're operating at the pinnacle of financial technology here. This is very high-end stuff. So, you know, everybody do your own research.
Yeah, so
and really understand what you're getting into.
From my perspective, right? From my perspective, and my trading strategy and investing strategy is that I hesitate, and I really hesitate on projects that say that they don't follow with when it's obvious, when it's like blatantly obvious that they are a security and they're not following the SEC's guidelines, simply because I don't want to put money into a project, right? And the project ends up getting hurt or gets under SEC investigation, because then it's going to hurt the price and the value of the tokens that's related to that project. So that's the reason why I always, you know, like I follow this, the SEC and the reports that they put out and stuff on crypto, simply because I want to see what their guidelines are, or try to get a grasp of what their guidelines are, so I'll know what projects to avoid and stuff, you know. So,
sure.
So we talked about, do you have anything to add to that, Leon? To those two constituents, how this SEC DAO report could affect those two constituents, the people that issue the tokens or the people trading the tokens?
Not at this time. I mean, I have a lot of thoughts, but not related to that particular issue. Like Greg said, I agree with everything. I think that it's you know, we're operating in a lot of things that are not clear at the moment, and you know, I think we'll just do a wait and see approach to see what's, you know, just follow the guidance as it comes out is what my strategy is.
Okay, so we talked about how the SEC DAO report affects the people issuing the tokens, and then we talked about how it affects the people that are trading or investing in the tokens. Greg, now how do you see it affecting the businesses, right? Not the people that issue the tokens, like the cryptocurrency projects, but like the businesses like us. You know, we're a media company, so and media and education and training company. How do you see it affecting the businesses that create the wallets, the education companies, the training companies, the people that make the services around the tokens? How do you see them being affected, or what its potential effect could be based on this DAO, the SEC DAO report?
So I just want to read this. It's on page 16 of the report. It says, those who participate in an unregistered offer and sale of securities not subject to a valid exemption are liable for violations of Section 5. So that depends, right? Are you, who are you in this this classification of businesses? Are you an exchange? Are you Poloniex? Are you listing DAO tokens? Are you listing other? Basically, the way you want to look at it is, does a token issue dividends, and are you not really doing anything to get those dividends? If so, it's probably a security. If that's the case, you want, and that's really according to what the SEC wrote here in this report. If that's the case, if you're an exchange, you probably don't want to list that token because you're kind of enabling liquidity of an unregistered security. That's definitely a no-no. If you're an education company, well, now you're just educating people on what's going on. Okay, that's a security over there. So one, I've been thinking about like a good example of what a token that's a security would be. So one that immediately comes to mind, and it's a smaller one, it's called Token Card, TKN. it raised $12 million in something like less than 15 minutes or 30 minutes, you know, whatever it is, something ridiculous. But the way Token Card works is, so you have this debit card that you have your tokens on, and there's a swipe, right? And each swipe takes a fee. And then if you have the Token Card tokens, you get a pro rata share of that fee. Now that's a security. So Token Card did not offer it in the US, but Token Card was listed on some exchanges after its initial coin offering or token sale, whatever you want to call it out there to avoid the SEC. And I'm not saying that's going to avoid the SEC, but that's what people are trying to do now. But so if you're an exchange enabling that, you're enabling the unregistered sale of securities to potentially unaccredited investors. That's pretty bad. That's pretty bad. And if you've done that for millions and millions of dollars, that's pretty good. For more than one token, that can give rise to both enforcement actions by the SEC. But one thing we haven't seen play out just yet is civil lawsuits. Those, I'm hoping that, you know, the litigation gets further pushed down the road, because litigation always causes issues and is potentially a waste of resources. But we haven't seen this played out in court yet, right? So we don't know exactly what's going to happen. But I digress. So the exchanges, if you're listing an unregistered security on exchange, that's not good. If you're educating people on it, well, how are you educating them on it? Are you educating them kind of like, you know, this is a good investment here, this is good education, look into this? Or are you, you know, doing it like a textbook, like, okay, so Token Card would fit under security, whereas something else like with a more utility token, you know, there's a bunch you could choose from. One that comes to mind immediately is something like Basic Attention Token. So Basic Attention Token, I'm just going to comment on their legal situation. They used a large Manhattan law firm to kind of structure their arrangement and what the value they were bringing was. And that's for specific utility in the advertising ecosystem. It doesn't pay dividends. You know, you could speculate on it, but it's really just utility for that ecosystem. So again, are you, what bucket of this second prong do you fall under? Are you an exchange? Are you educating? Are you providing other sorts of services? And essentially it comes down to, are you, according to this SEC report, are you enabling liquidity and sale of unregistered securities to unaccredited investors? You know, we got to protect these orphans. The SEC wants to protect the orphans and widows. They don't want people who have, you know, they need to make rent next month, investing in a highly volatile, unregistered financial instrument. So it really depends where you're at. But and we saw it when this decision came out. We saw certain tokens get delisted from certain exchanges, right? So I think it's going to continue on that way. I think that this decision is actually very good for the health of the industry, and it's going to kind of funnel out the crap, and you know, the higher level ones are going to start to become more apparent.
Okay, all right. Well, that's all the questions I have at the moment. You know, I'm going to give a few minutes for the audience to submit their questions in, and I'll look through it and relay them to you, right? The first question that I have is from Lavera Design, and she's asking, you know, is that how do you find out, or how do you determine if a token is a security or not?
So look at that. Read this decision. Just read it. Spend some time on it. If you really are going to be part of the blockchain space long term, if this decision scares you and you don't want to be involved anymore, that's fine. This technology, you know, to me is revolutionary, as we're seeing. But if you look at this decision, Google the Howey test, right? But most specifically, focus on this decision on pages, because they're likely all going to be an investment of money in a common enterprise, And you're going to expect some profit, right? Speculating on it. So you're going to expect some profit. So focus on section 3B4, pages 12 through 15. And I'll just read the headings of each one. The efforts of Slockit, Slockit's co-founders, and the DAO's curators were essential to the enterprise. So were they essential to the enterprise? DAO token holders' voting rights were limited. Were the voting rights limited in that they needed curators and Slockit to enable them? Or could they really vote on whatever they wanted? And then issuers must register offers and sales of securities unless a valid exemption applies. Check if the exemption applies. Like what Filecoin is doing with the Reg D offering to only accredited investors. So, you know, short of going to law school, read this report, look at the Howey test, and focus on the governance of the token. And then compare that. There's no black and white here. Focus on the governance of that token, and then compare it to this SEC report with a focus on section 4, what was it, 4B3? Section 3B4, excuse me. So that's what I would do.
Okay, so this is another good question here from Jan Siebert. You know, Greg, she asked, what if a token issuer, a crypto project, goes outside the U.S. and are they? My personal opinion is that it doesn't matter where you're at. If you're dealing with U.S. People in the U.S., that the SEC, it still falls under their jurisdiction. Some people think that leaving the country and doing it somewhere else keeps them outside of the jurisdiction of the SEC. Could you comment on that?
Sure. So if you're offering your financial instrument, like a token, to people in the United States and you live in Spain, you come under the jurisdiction of the SEC, purely based on you offering it to Americans. That's the law. So what a lot of tokens are doing, like for example, status.im, you know, they caused problems for the virtual machine for a little bit. They didn't offer it to Americans. Now, are there ways around this? Sure. Like, I'm not telling you to use a VPN, but that's the next thing, right? So you're going to have to maybe declare that you're not using a VPN, and we're going to have some level of KYC involved with it there. So yeah, just because you're not, so say you offer it from your non-for-profit in Singapore, as long as you're offering it to Americans, you come under their jurisdiction.
Okay.
And with that, another thing that's I think is important so there's only so much you could do with VPN. You know, there are ways for people to get around that, but a really good thing to do is to make sure you're not selling to terrorists and you're financing criminal activity. And there's a certain list I want to put you guys onto if you're planning on doing an ICO. And this is, you know, bare minimum that you should do. You should really do a lot more than this. But let me just pull it up for you guys. Ty, you could go to the next question while I pull this list up.
By the way, that was my my daughter, Athena. In case anyone was wondering who that little girl was, I just ran into the picture. She wants to start, you know, getting involved into Bitcoins as well and cryptocurrencies as well.
Oh wow.
Okay, so I would say this.
So you don't want to sell to the office. Anyone on the list, Office of Foreign Assets Control, you want to, you know, make sure you're not doing anything with anybody on that list. Those are basically blacklisted people that you don't want to get involved with, and that will cause enforcement actions to come down on you.
I know you're an attorney for us, but not for the audience, so you cannot make recommendations to them. But I would say this is that if you are a business that is involved with cryptocurrencies, Leon and I believe that this market and this industry is going to go in. Right now, it's at $107 or $108 billion market cap. We believe that this is going to go into the $1 trillion market cap. And if you have a long-term outlook like we do as a media company, and you guys want to make sure that your business and your company survives the long term, the legal, and navigate the legal waters correctly in crypto, I would say to look at, you know, getting a competent lawyer or counsel to help guide you, whether you are a business or a cryptocurrency project, because there's so much potential business in this cryptocurrency world, in this new industry, that it does not make sense to take the risk of the legal risk of getting in trouble or not following your country's laws. That was a big decision for us to make as a business, as a company, as a media company, to you know, retain counsel and not just go out there and try to figure it out on our own, because we're not attorneys, we're not lawyers, we don't know these legal waters to navigate. So that's what I would say to a lot of people is that, you know. Somebody asked here, is Bitcoin a registered security? Didn't the SEC acknowledge that Bitcoin was not a security somewhere in the past? I read that somewhere in the past.
So yeah, so well, now what we have Bitcoin Cash and Bitcoin Core, and who knows what they're going to do. So it could become one in the future based on, you know, how that plays out. Currently, I don't think it's a security. And that's based on kind of what the SEC put out there. Again, do your own research, hire your own lawyer. But that doesn't mean it can't become one. And especially with the way, you know, voting processes and governance works. So.
Did you see anywhere in the report if they stated that Ethereum is a security or not? I know they said that the DAO token is a security, but what about the Ethereum token that was used to purchase or transact the DAO token?
Yeah, so
you know?
that was, so I actually went to an event in New York put on by another big law firm in Manhattan. And we had similar opinions that this decision essentially says that Ethereum is money and is likely not a security, which is really, really interesting.
Yeah, this is where Leon and I find that's very confusing, is that the IRS, a government body, says that Bitcoin is a property, and then I think, was it FinCEN or the CFTC? They deem Bitcoin as a commodity, one of those agencies. And now the SEC is saying that it's money, but not a currency. Or, you know, so you got these different government bodies all giving it a different label or an interpretation, which is where I think a lot of the confusion comes in for the crypto market.
Right. So for FinCEN, it's a virtual currency. For CFTC, and we could get into this in a separate video, it could potentially be a commodity. I think if certain aspects, certain tenets are met, or it may be a commodity outright. And then the SEC, yes, it's unlikely that Bitcoin would be classified as a security. So there's, you know, kind of like a legal minefield that you want to operate through, but because this technology is so powerful and it's peer-to-peer immediate settlement of transactions without a middleman, that it's kind of operating kind of, I don't want to say this the wrong way, but kind of ahead of what the government could potentially clamp down on right now. So, you know, we'll see. We'll see where it's going to go, and it's going to play out over years. And one thing I'm really interested to see is how, like, litigation is going to happen, because now we know the DAO is a security. That means other things are securities. So you're potentially selling to widows and orphans. I don't know. And then are we going to have legal opinions that involve code, interpretation of code, legal code? This is going to get really weird, guys. You know, this is not going to be your everyday legal scenario. This is going to get strange, very high technology. And on that, so what we're seeing now with the Filecoin token sale, and I'm not an investor in Filecoin, full disclosure, not doing it. They're using the SAFT, simple agreement for future tokens. So they're starting it as a security to then become a token later on after it's built. So that's kind of like the newest, and that's based on the SAFE, which is for, you know, VC equity investments. But this is like the newest legal instrument that's helping to navigate these waters. And now the SAFT is interesting, but, you know, some people are arguing that it's only for accredited investors, so not for unaccredited investors, and that could hurt it with respect to decentralization, because it really limits who you can offer it to. But we'll see. You know, we'll see what's going to happen. Maybe it'll be very successful. But the SAFT is a good starting point for kind of bringing this under control.
Okay. Well, that's all the questions I have, and that's all the main questions. There's some tax questions, but I'm going to suggest that the people asking about the tax questions, that they consult with their country's certified public accountants, licensed accountants, to answer that, because that's outside the scope of this video, which is based on just the legal aspects and how it could potentially affect the crypto community, what the SEC DAO report, the impact of it on the crypto community. So I just want to say thanks for coming on our show, Greg, to kind of help explain and this, you know, because the legal side is outside of my expertise and outside of LeonFu.com's expertise. You have any other comments, last comments, Leon?
Nope, that's it for me.
Okay, so I just want to say
Ty, just one more thing on the legal, what I think people should be on the lookout for. So now we have this security decision. What I would really like to see from the SEC guidance on utility tokens is a utility token a security? Something like basic attention token. Also, I don't own any basic attention token. It's just an easy one to use. And then what about a utility token for a project that has not yet been built? Is that a security, or is it not? And is it, you know, based on the governance model? It depends how it's structured. So be on the lookout for those types of things, whether or not it's a utility token, and then is the project been built for that utility token?
Yeah,
okay.
I think that's interesting, Greg, because Kickstarter's been around for a long time, and that is a product, right? Typically, you're buying, you're putting money down, or even my Tesla Model 3 last year, I put a deposit down for a car, right? That didn't exist yet, but that's obviously not a security because it's a product that you're buying. So could it be argued that these are products, these are software products that you're buying rather than a security? I'd like to see the government give guidance on that. Like you said, a utility token is really a product, not a security, right?
Right.
So let me ask you this, right? So before we wrap it up here, Greg, so that we can conclude this video right here, if someone that's watching this, that's a business, a blockchain or a cryptocurrency based business, and they want to reach out to you or contact you, for legal counsel, since you are one of the few attorneys out there that focuses specifically on blockchain and cryptocurrency based businesses, right? What would be the best way for them to contact you? Or do you want me to let them know on the video, or send me the info and I'll put it in the description box? What's the best way for a business or someone that has questions or needs legal guidance in the blockchain and cryptocurrency space? What would be the best way for them to contact you?
Yeah, sure. Email would be the best way, and you can get that email. I think we'll either put it on the video, or you can email Ty and Leon, and they can get it to you. And I'm very happy to have a phone call with you guys to discuss your issues, because there's potentially a lot of them, and a phone call is free. So don't hesitate to reach out.
And you are based out of New York City.
Correct.
Okay.
Undisclosed location for now. Don't hack me. Don't hack me.
Okay. All right. So All right. Well, thanks for coming on here. If you guys like these types of the legal professionals, such as Greg, to come on and just give legal commentary and review on some of the government's bulletins and reports and releases, give us a thumbs up on it so that we'll know to continue bringing, ask Greg to come back. If you guys are not interested in it, give us a thumbs down so we'll know not to waste our time and Greg's time. Just let us know, okay? And thanks for watching this video. If you guys have friends, family, or colleagues that are interested in cryptocurrency investing or just learn more about it, share this video with them, share our channel with them. Follow leonfu.com at HeyLeonCFu, and then you can follow me at HeyTaiZen, and then you can also subscribe to our channel at www.cryptocurrency.market/newsletter, and that's how you can follow us on there. And I will get the contact information and from Greg, and I will leave it in the description so that you guys can reach out to him if you guys have any legal questions. Whatever you guys do, please do not contact me and Leon about legal stuff or tax stuff. We are not certified, tax accountants. Okay, we are definitely not lawyers, or I barely understood the first paragraph of the SEC DAO report. So do not ask me, email me or Leon or tweet to us about legal questions. Okay, contact Greg or other legal professionals, not us. Okay, we're traders and investors. So thanks for watching this video. Thanks for coming on, Leon. Thanks for coming on, Greg. And this will conclude this live broadcast. Thank you, guys.